Assalamu alaikum. The popular claim that individual investors can't beat the market is false. It's true that many individual investors have no business actively investing and would do better off if they just stuck with passively managed index funds. And by the way, there is no shame in this. You should do what you think best fits with your skill level and your financial goals. If your financial goals can be achieved with passively managed index funds, then it doesn't make much sense to go through all the trouble of actively picking stocks, since the latter is much more risky and time-consuming. However, according to research entitled "Can Individual Investors Beat the Market?", a subset of individual investors can beat both actively managed funds and indices consistently, earning above market returns in the process. According to this paper, results suggest that skillful individual investors exploit market inefficiencies to earn abnormal profits, above and beyond any profits available from well-known strategies based on size, value, or momentum. And now you're probably wondering, well, how do these individual investors do this? Well, I'll tell you. There are three ways. The first is avoiding prudence bias. Prudence bias refers to the tendency to prioritize looking smart over potential returns. People with prudence bias are more likely to avoid taking risks and making bold decisions, even if doing so could potentially lead to greater rewards, out of fear of looking foolish if they are wrong, and the impact that looking foolish will have on them. Professional investors commonly suffer from this. This is because any appearance of foolishness on the part of the professional investor as a result of making an unpopular investment may cause customers to pull their money. Since fund managers are largely compensated based on the amount of assets under their management, they aren't willing to risk tarnishing their image with an unpopular investment. Let me put it to you this way. No fund manager is going to lose their job or experience significant outflows of assets under their management if they lose money on Apple stock. Apple stock is a tried and true company and accepted as a wise investment. So if they lose money on that stock, they won't really be to blame. They may lose their job or at least see a reduction in assets under their management if they lost their money on something like Bitcoin. But here's the catch. You can't really beat the market if you're always choosing the safest option. So fund managers tend to not beat the market. Individual investors have more liberty to make unpopular picks and can afford for their returns to look very ugly in the short run if they are convinced their investments will lead to longer-term outperformance. Exploiting this advantage is the first way in which individual investors can beat the pros. The second advantage that individual investors have is that they have no constraints on their position sizes. There's no reason for an individual investor to sell their highest conviction stock in order to buy their seventh highest conviction stock, for example. On the other hand, fund managers are often forced to do so. This is because fund managers have to stick to strict limits on how much weight any one position can constitute of their overall portfolio. For example, many funds have a 5% limit for any one position. So if they hold Tesla at 5% of their total portfolio and this stock doubles in price, even if they think that there is still potential for a 10x return after the doubling, they are still forced to sell half of their position to bring it back to the 5% limitation, and then have to find some other stock they may not be nearly as convincing to invest the proceeds from the sale of their highest conviction stock, which they were forced to sell. Individual investors don't have to worry about this. They can let their winners ride. They don't have to unnecessarily interrupt the compounding process and can take full advantage of it. Legendary investor Peter Lynch once said, "Selling your winners and holding on to your losers is like cutting the flowers and watering the weeds. If you do this for long enough, you're going to end up with a pretty ugly garden." Professional investors are forced to do this. Individual investors are not. The third advantage that individual investors have compared to the pros is their size advantage. Large funds can't really take up meaningfully large positions in small companies. A fund managing tens of billions of dollars may identify a $100 million company that can potentially 10x, but even if they're right, it's not going to meaningfully make a dent in their overall returns. Even if they bought the entire company, it may still be less than 1% of their total portfolio. On the other hand, an individual investor, naturally dealing with a smaller sum of money, can invest a much more meaningful percentage of their portfolio in this opportunity, in this smaller company, and when it pays off, it's going to show up in their overall returns in a very big way. Not to mention, if a larger fund wants to make a purchase of a smaller company, the volume they bring will likely push up the price of the smaller company's stock in a big way, so they'll end up having to buy at less than ideal prices. So instead of making their purchases all at once, they'll have to spread them out over a longer period of time, which may cause them to miss out on the best time to actually be buying. By being willing to look foolish in the short term and having a stomach for seeing their portfolio in the red for an extended period of time, and sticking with their highest conviction picks and having the flexibility to make meaningful investments into smaller companies, individual investors have advantages compared to the pros, and when exploited, they can absolutely beat these professionals. If you'd like me to teach you how to become a profitable halal-conscious investor in both stocks and cryptos, take the first step by signing up to our newsletter, link in the bio. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.